While the Nasdaq is closed and the last reported closing price for Rezolve AI PLC (RZLV) on Friday, October 10, 2025, was $5.13 per share. This marked an intraday decline of 11.25%, an alarming drop for a stock that had seen explosive momentum only weeks before. The general expectations surrounding Rezolve AI PLC, like much of the AI sector, is a narrative of exponential growth, validated by the company's aggressive and heavily publicized revenue and ARR guidance. However, the unexpected reality we must confront is that despite raising its 2025 annual recurring revenue (ARR) guidance to a minimum of $150 million and initiating a $500 million ARR exit rate for 2026, figures that should send the stock soaring, the market reaction has been marked by extreme volatility, culminating in a sharp sell-off. This divergence between bullish corporate forecasts and bearish market price action creates a curiosity loop for any serious investor, challenging the assumption that good news automatically translates to stock appreciation, especially in a heavily shorted, speculative name. The immediate insight is that the market is currently less concerned with future revenue targets and more focused on the delicate balance of financing, potential dilution, and the shadow of short seller reports that have plagued the stock's recent movement. The core belief is that RZLV is an AI growth story, an early mover in the agentic commerce space. But a deeper, more contrarian take suggests the stock is currently trading as a battleground security, where technical short-term trading dynamics are overshadowing fundamental long-term value. This is a critical distinction that anyone using an individual brokerage like Fidelity or even a self-investing platform like Robinhood for online investment must understand. Diving into the recent stock movement, the volatility of Rezolve AI PLC stock has been breathtaking, defining a roller coaster ride that is far removed from the stable compounding typically associated with names like Apple stock or Tesla stock during their dominant growth phases. In the span of a single quarter, RZLV plummeted to a 52-week low of $1.07 back in April 2025, only to surge dramatically to a 52-week high of $8.45 in mid-September 2025, representing a parabolic gain of over 700%. This kind of massive price swing screams of high speculation and low free float, a common characteristic of stocks with significant insider ownership, which for RZLV stands at a substantial 67.36%. The September momentum was fueled by several key announcements: a $200 million oversubscribed financing round anchored by institutional investors like BlackRock Inc. and State Street Corp., and a significant corporate reaffirmation that directly rejected what the company called a misleading report from a short-selling entity. The narrative shift was electric. Institutions were buying, analysts were raising price targets, some up to $10.58, and the company was painting a clear path to becoming a dominant AI commerce infrastructure player. This powerful cocktail of positive news drove the stock to its recent highs. However, the reality of the last 2 weeks has been a sharp correction. The most recent H1 2025 earnings release on October 1st, while showcasing a 426% year-over-year revenue increase to $6.3 million and beating consensus on adjusted EBITDA loss, was also coupled with a widening net loss. Even the subsequent announcement of key acquisitions, SmartPay and Subsquid, to build out the digital asset and payments backbone for their agentic commerce platform, did not stabilize the price. This inability for highly positive fundamental news, such as achieving over $90 million in ARR year-to-date and raising future guidance to an astonishing $500 million ARR exit for 2026 to counteract the downward price pressure, suggests a deeper systemic issue. Either the market fundamentally distrusts the aggressive projections, given the company's non-traditional SPAC entry and limited operating history, or the short interest and technical selling pressure are simply too intense. Trading volume remains extraordinarily high, recently clocking in at nearly 30 million shares, significantly above the 20-day average, indicating a high level of contention between buyers and sellers. This kind of volatility is where active traders using a platform like Interactive Brokers might thrive, but it poses significant risk for passive investors in a Schwab Intelligent Portfolios or a General Fidelity brokerage account. The institutional picture, despite the recent selling, tells a story of increasing, albeit cautious, belief. Filings as of the end of Q2 2025 show a significant increase in institutional holders, with major firms establishing or dramatically increasing positions. BlackRock Inc., for instance, saw an increase of over 47,000% in shares held, a testament to the fact that while the stock is volatile, major players are buying into the long-term vision. This activity is a crucial counterpoint to the bearish price action and highlights the expectation versus reality tension perfectly. The expectation on the street might be a continued collapse, but the reality behind the curtains is that smart money is quietly accumulating a stake, betting on the successful execution of a new global strategy. The core of their investment thesis is in the company's proprietary large language model, BrainPaw, which is purpose-built for commerce and is touted to be competitive with generic models like GPT-4 in specific enterprise retail scenarios. What exactly does Rezolve AI plc do? The company positions itself as an industry leader in AI-powered solutions, specializing in enhancing customer engagement and operational efficiency, primarily in the retail and commerce sector. Their flagship offering is the BrainSuite platform, which uses real-time autonomous AI agents to optimize everything from customer service to sales and digital engagement, a concept they brand as agentic commerce. Their focus is on high-margin, sticky SaaS revenue, evidenced by the impressive 95.8% gross profit margin reported in H1 2025. This vertical-specific focus is their key differentiator against giants like NVIDIA stock, which provides the foundational hardware for all AI, or broader software companies. They secure large multi-year contracts with major global enterprises, including H&M and Ferrero. Furthermore, their recent acquisitions are critical. SmartPay builds out the digital asset and crypto payment rails for their platform, a forward-looking move in partnership with Tether, while Subsquid provides the decentralized data layer. This is not just an AI company, it's an AI-driven, commerce-focused, fintech integrated entity aiming to consolidate the complex infrastructure for the next generation of retail. This is the new frontier of online investing, requiring a different lens than simply looking at traditional metrics found on investing sites for blue-chip companies. The future outlook for Rezolve AI plc is a high-stakes scenario. The path to achieving the audacious $500 million ARR exit by 2026 rests on two main pillars. First, the seamless, successful integration and monetization of their recent acquisitions, especially the digital payment and data infrastructure, which will be crucial for the adoption of agentic commerce by their blue-chip customers. Second is the continued ability to secure new enterprise customers and expand their global footprint, particularly through high-value partnerships with tech titans like Microsoft and Google, who are key distribution channels for the BrainSuite. Analysts project revenue growth to be 90% per year and EPS growth to be over 120% per year, albeit from a negative base. The risk, of course, is that these targets are indeed highly ambitious, and any significant miss on a quarterly basis could lead to another vicious sell-off. The valuation, with a price-to-sales ratio that appears astronomical when calculated on LTM sales, is entirely predicated on realizing these forecasts. The company's approximately $230 million in cash on the balance sheet following the recent financings provides a strong war chest to execute their strategy, but cash burn must be managed carefully. For investors trying to navigate the complex world of high-growth tech, whether through a SoFi Invest active trading account or utilizing Fidelity ETFs for exposure, RZLV presents a textbook case of a risk-on, high-reward proposition. The short-term price action says extreme risk, but the long-term institutional accumulation and the sheer ambition of the revenue guidance screams generational opportunity. The coming quarters will be the ultimate reality check. The question is not simply, will they hit the numbers, but will the market believe the numbers? Comment below how many shares of RZLV you currently hold and what you believe the fair price is based on the 2026 ARR guidance. This kind of aggressive high-growth stock, with its accompanying volatility and fundamental versus technical battle, is exactly what makes the market fascinating. It requires conviction, a deep understanding of the product, and a willingness to ride out the dramatic price swings. The tension between the expectation of a massive AI winner and the reality of a speculative, heavily shorted name is the trade itself.